Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, November 3rd, and let's just get into the S&P 500 here. Last night it was pretty interesting. We had a nosedive down to the point of control area, the lows, the October point of control, basically, pretty early in the Globex session. And we had a huge move off of those lows and basically went straight to new highs relative to the last couple of days. So that set up for a decent trading day today. We opened up and traded lower. Let's see, we opened up around 9:30, around these levels, and traded lower and found a floor at basically the high volume area from yesterday's volume profile distribution. And we had a nice trade off of those levels, and we were looking at 1238 to 1240. That was our level to watch, because those were yesterday's that was yesterday's resistance, and we broke through that, and after that our target became 1250 on the S&P, and sure enough we traded through that and we traded all the way up to 1260. So really, this uptrend remains intact. We have two levels of importance printed today. One is the 1257 level, which price is currently below, and one is the 1245 level, which was the point of control for the entire session. So, really, with tomorrow's job report tomorrow morning, it's hard to say, if this market continues to go higher or, if we're topping out. We'll find out tomorrow. But for your levels, it's obvious that, this point of control, 1245, that's important. And another level of importance is the 1260 to 1265 level, and I'll show you that right now. So I zoomed out to a 1 hour 90-day chart, and we see, including overnight from last night, we see our nice double bottom pattern off October's point of control, and bam, a breakout to the upside. And now we're experiencing, a little overhead resistance. This is this 1260, 1265 level. That's where the market really took a tumble earlier this week. And we're looking at these levels to regain them from a buyer standpoint and basically recapture them and try to take back that 1280 level that we were trading up at back at the end of last week. So, the jobs report, it can change anything, but as far as downside, let's say the market, here's your plan. If the jobs report is bad and the market trades off, you're looking for some type of trading opportunity anywhere from 1240 to 1245, but ultimately 1245. And that's where you're looking for buyers and, move to the upside. If the jobs report is absolutely abysmal, then maybe this market trades back down into this range, and you're looking back at 1230 to 1220 as your target to the downside. If the jobs report is good and this market, let's say, gaps higher, 1265 to 1267, those are your ultimate levels, and we're looking for a nice upside move. 1267, that's our gap. That's the resistance level that we experienced on Monday, and we couldn't get above those levels. So we're looking for, if we get above those levels, we're looking for 1280 to 1285, or the highs from last week. We're looking for those. That's our upside target. So, in terms of risk reward, if you're looking for a couple day move, the risk reward isn't too great, but there is opportunity to make money, and that's what's important. So, you have to figure out how the risk profile is for you, and if it makes sense for you to trade. Tomorrow is Friday, so personally, I don't do a lot of trading on Friday unless if it's a very volatile day. I tend to scale back and take risk off into the weekend. But, some Fridays are different, and some Fridays we have huge buying, which allows you to, continue and stay long into the weekend. So let's cover silver. Silver, we're continuing to see upside momentum, which is good news for buyers. So, we're just getting confirmation that this October point of control at 31 is confirming support, and our resistance at 34.35 is also holding. So, really silver's kind of in no man's land. We're approaching the top of the box, which was last week's resistance level. It's the point of control for the last 6 months. So, it's an important level, and if silver continues to move higher and starts to roll over, be prepared to take some profits. It's not a bad thing, because silver can come right back down to the $31 and do this whole process over again. We're looking for, opportunities to make money in this market, and sometimes you take what you can get. Just to show you what I was talking about, why that 34.50 level is resistance, you can see it's the point of control for the range. We have some key moving averages, 200, even the 50-day moving average, generally speaking, is in this range. So, we're getting a little bit of mixed signal. It's not a whole lot of opportunity right now, especially being at the top of the range. But on any given pullback, if you're looking to get long silver, then this is your opportunity. Likewise, if you're trying to get short silver or sell it, we're not at bad levels right now, to be honest. And, if you're looking for an opportunity, I would keep a stop above last week's intraday high, which would be close to 35. So, if you're looking to short silver, this is your trade right here. Although the downside isn't, it's not a great reward. Okay, now we're going to cover gold. Gold made new highs relative to last week, so that's a good sign. And I was talking about relative to silver last night, that gold was, outperforming. We were already back at last week's highs, whereas silver today, we're approaching last week's highs. So, gold looks like an all clear on any pullback. That's your opportunity, especially around the 50 and 20-day moving average. So, say 167, 168, that's your real opportunity in gold. Okay, let's move on to Apple. Apple's interesting. It's starting to perk up some. We may be at an opportunity right here, right now on Apple. We have to keep a close eye on it. We're still getting some mixed signals only because October's point of control is still at 405, obviously, because it's no longer October. So that's still our resistance level, but for this 90-day composite, our support, this 398 level, it's holding, and now we're pushing above 400. So from, right here, right now, of course, Apple's up, it's almost at resistance. It has $2 more. But if this thing, if the market gets going and Apple catches some momentum, we could see an upside breakout to Apple and finally take a shot at closing this gap between 415 and 420, ultimately 426 on the upside. So it looks like there may be potential in Apple. We haven't gotten all clear signal yet, but it's okay to start, nibbling in Apple with a stop under this week's intraday low. I think that's going to be your line in the sand, and looking for some decent upside on Apple. Another name I'm going to cover is the VXX, which is the VIX short-term ETN or ETF, and what we're seeing here is basically when the market rallies or moves higher, this particular underlying gets crushed. And when the market gets crushed, this thing has a tendency to rise. And it's pretty volatile. And one strategy I love to use is to buy, basically on anticipation of market rallies, is to buy VXX puts. And I'm not a fan of using this instrument when the market is. I don't like to use this to hedge my portfolio. I think it's flawed. It's like buying USO to basically get oil exposure. It suffers from contango and the fact that people, they roll out of the front month VIX and, roll out to the next month. These are short-term futures, so it concentrates on that front month. And so when people roll out to the next month, this gets crushed regardless if volatility gets crushed or not. So it really, it's a double whammy when you buy puts. But, when the market was weak like we experienced a couple of months ago, this thing really worked out, and using volume profile, it was a great winner. And we had great opportunities off the month's point of controls. We had great moves, great chances for profits, but now we're coming back into a more controlled environment. The volatility is coming in some, so this underlying is still elevated. So personally, right now, I own 42 November 42 puts on this, and right now they're up about, I think around market close, they're up around 35, maybe even a little more, but 35%, give or take. And what I'm looking for, honestly, is 100% gains. That's my expectations when entering this position. And today when the market opened, these were up around 20-25%. And I was tempted to take profits on these, but then I told myself, I'd be angry at myself if I closed these out for a 20% gain. And normally, this thing gets crushed so quick that 100% gains comes within a couple days. So I held out. The position went around break even. It even went a little underwater at some point, but the market wasn't violating the S&P wasn't violating its support levels yet. So I was holding on to it, and sure enough, it ended up paying off. Hopefully tomorrow the market, continues to rally. Therefore, this will get crushed even more. We'll see. But one way I like to play the market, which may help you out, is to buy with anticipations of market rallies. Is buy VXX puts. It tends to work out nice. Okay, the last name I want to cover, only because I think it's appropriate to cover this every once in a while, just for the fact that when oil prices go up, there's concerns that economic activity will slow down. And what we're seeing right now is a potential breakout in oil. This is the oil future contract. And earlier this week, we got a bounce off of October's value area, which is just around 89. And also, it was September's point of control. So we had a little double whammy here. You can see our whole moving averages are still pointing up. So the trend is still to the upside. And we're looking for right now a breakout above 94. And if we get this, then, it's $98 to $100. We should see that in oil pretty soon. And why I say 98 to 100, 100 is, that psychological level, and two, $98.50 is the point of control over the last 6 months. So over, short term, it's hard to say which way the market's going. The trend is definitely higher over the last 3 days, but any market's jobs report coming out, can crush any hopes of that. Be aware that, it's Friday, there's a weekend. A lot of people, if they are long, they may be taking profits just to, take money off the table. That's what money managers do, and that's what you should do. So I hope this helps. One other thing about our website, volumeprofiletrader.com, it's going to be finished hopefully by next week, and that's when we're going to be shifting into a premium service where we're going to be offering videos like this and a little more in-depth, more trading ideas, specific support resistant levels, and some ideas off those levels. There'll be a community forum where you'll be able to talk to many traders, and I will be posting there several times a day. That will be my main, hub. That's where I'm going to be hanging out. I hope you will join us. We're going to be, we're going to try to build something special for traders who want to better themselves. And so be on the lookout. I'll keep you updated. But the website, you can check it out for right now. It's not done in the least bit, but it's volumeprofiletrader.com. I'll put it in the description at the end of this video. Anyways, guys, have a good night, and I'll see you tomorrow.